Hi, my name is Matt Kaufman. I'm an attorney with the law firm of Hathaway & Coons based here in Cheyenne, Wyoming. Today I was asked to give a presentation to you all about sort of the general framework of blockchain technology, and legislatively and legally blockchain has been getting a lot of attention in Wyoming, and just sort of a little discussion about what it all means, what it's coming from, and maybe where it's going to. Before I dive into that, I'll give just a little bit of my background. I am a practicing attorney here in Cheyenne. My focus areas really are on corporate and business law. I'm one of the few attorneys in Wyoming that really focuses my practice on representing technology companies, particularly startup companies. I represent technology startups from across the state of Wyoming and even in Colorado. And because of that, I very early on in sort of the blockchain movement began working on these issues and representing companies both in and outside of Wyoming, dealing with not only cryptocurrency related securities, legal issues, and also blockchain related issues. So today I hope to maybe bring a little clarity for you all about what this all means and what it is. Additionally, I've had some recent exposure. I was fortunate to be appointed by Governor Matt Mead both to the Endow Executive Council as the only attorney working on that Endow Council, and also more recently appointed by Governor Matt Mead to the Blockchain Task Force, which is a legislative task force that has been asked to specifically look at new ways to implement technology, specifically including blockchain, into new legislative efforts and mandates forthcoming. So I'll talk a little bit about my work there and what's coming this next legislative session from blockchain. So quickly, we'll establish some working definitions on what blockchain is. So very simply, the way I think about blockchain is the traditional form of data storage for servers and on the internet is to utilize a central server system where you have one location for data, and computers via an internet connection access the data in that server. You can access it from anywhere in the world, and maybe a data storage house is made up of lots and lots of servers, but it's one central location. The idea for blockchain came along, and the theory, the computer science theory behind it, was instead of having a centralized server system that gave hackers and outsiders a single point of focus in which to try to hack and to manipulate, we would take that data and distribute it onto lots and lots and lots of servers everywhere. And by doing that, it decentralizes the data, and it makes it very difficult for hackers and for others to know specifically where to go to access particular pieces of data and how to assemble that data in meaningful ways. So that was sort of the genesis of where the blockchain technology came from. The way that it was first utilized was in the context of cryptocurrencies, things like Bitcoin. What a cryptocurrency is essentially a digital form of exchange that is represented by nothing more than code ledgers. And so one of the early problems with something like Bitcoin became, how exactly do you and I exchange Bitcoin, exchange a digital token of value, and keep track of that? And so the idea again was to utilize a blockchain solution whereby, using this decentralized mechanism where the Bitcoin is stored everywhere, you and I can only exchange that cryptocurrency, or in this case a Bitcoin, if we agree in a distributed ledger that's housed on various computers across the world, that we agree on our ledger that transaction occurred and what the outcome of that transaction is. And that's essentially what a blockchain does then. It creates a mechanism whereby the proprietors of a particular blockchain establish parameters and say, in order for a transaction to occur in this chain, in this circle of people that house this data or access this service or product, in order for a transaction to occur, a certain number of transaction ledgers have to match up. And unless those transaction ledgers match up, the transaction isn't allowed to go through. So in an instance like Bitcoin, all of these Bitcoin are housed virtually and digitally. And in order for you and I to be able to buy and exchange Bitcoin, someone, a third party, has to get onto our ledger and verify that that transaction occurred. And then the Bitcoin system, I don't know exactly how many verifications it requires, but it requires a number of verifications. And once all those verifications occur and are aligned and agree with each other, then the transaction is allowed to go through. And so this can be done at scale with requiring thousands of verifications, or it can be scaled down to where maybe a particular blockchain only requires a couple of verifications. But the idea remains. The idea is, first, the data and information is not housed in just one location, it's housed in multiple locations, making it nearly impossible, or some say impossible, to hack because you don't know where the data is stored to manipulate. And secondly, because of this chain of transactions and the ledger that has to be solved before a transaction is allowed to go through, it makes it, again, arguably, it makes it immutable or fraud proof, because unless all of the transactions agree and concur, it can't go through and be approved. And so it makes it very, very difficult, if not impossible, for someone to defraud someone else and steal a Bitcoin or steal some type of cryptocurrency or cheat someone in a blockchain-based transaction, because there wouldn't be consensus on the ledger. In a blockchain format, when these transactions are approved and consensus is reached, there is a digital stamp on that transaction. And in coding terminology, that's called a block. And that block typically contains the date of the transaction, the parties involved in the transaction, and what the transaction was. And then once that transaction is approved, the next one is tagged on. And that's where really the terminology blockchain comes from, because it's a chain of these solved blocks, which are transactions. So in any event, that's sort of the basic overview and kind of 30,000-foot view of what blockchain is and how it works. Understanding that blockchain can theoretically be used for a number of different technologies, a number of different applications. Today, the most commonly talked about is that of cryptocurrencies, like Bitcoin. So I have a graphic here that we'll try to put up on the screen, but this is just kind of a quick interesting overview of kind of some of the ways that blockchain is being utilized. We often think of and we know the term SaaS, which is software as a service. Software as a service is something that's sort of intuitive to all of us now, because we log on to cloud-based programs and we access software to do things for us, whether it's accounting or sending out emails or whatever the case may be. Blockchain as a service is sort of a new wave or direction of how blockchain might be used. People are talking about using blockchain in various applications, things like smart contracts, where you might have the purchase and exchange and sale of goods on a micro level that's automated, and unless the blockchain, there's consensus for the transaction's approved, perhaps it can't go through. People think that blockchain could be utilized potentially for the storage of digital records, things like medical IDs or property records. That's something I'll talk about in a little bit with respect to Wyoming. There's things like payments and loans that, again, a payment could be made, there could be a verification, there could be collateral released or a security interest released. That could potentially be put on a blockchain. And you could also use it for things like tracking rights. Again, I mentioned property records, but people are exploring it for auto titles, for voting, for tracking intellectual property, any number of things where it's really important to have a high degree of security and be able to verify a transaction or when a transaction occurred. Now, it is important for everyone to know that there are people that are not so hot on the blockchain technology out in the technology world. There are people that believe while blockchain is certainly a good and worthwhile technology to look at, it's still early in its stages. It's slow comparatively to a lot of other databases. It can be very expensive to run. We often hear about these Bitcoin miners and the amount of power that they consume, and that's simply because in order to utilize computing power to solve an algorithm, to solve a blockchain transaction, that can require constant and very high number of computer servers to process that computing power, or to process fast enough and utilize that computing power, and that can consume a lot of energy. But because of that, it often can be expensive. Again, often new technologies are expensive at their early adoption, and so we're kind of at that phase with blockchain where there's still a lot of hurdles before it's something that is likely to be widely used, and that adoption is growing all of the time, but there's still kinks to work out. So I'll back up for a minute now and talk about what is, there's been a lot of buzz in Wyoming surrounding blockchain and cryptocurrencies over the last couple of years. This really all started, I would say, last year with the legislative session, and so moving off the topic of just blockchain and moving to cryptocurrencies for a second, Wyoming was one of only 3 states up until last year that, because of obscure, archaic laws in our Money Transmitter Act, that residents of Wyoming could not technically and legally buy and exchange cryptocurrencies. There are a number of exchange houses that have developed over the last few years that buy and sell and trade in cryptocurrencies. So someone like myself can get on and set up an account with one of these exchanges, and I can buy Bitcoin or Ethereum or Ripple or whatever the cryptocurrency is that I want. Well, up until last year, because of the Money Transmitter Act and the technical requirements of that act that required these exchanges to have a money transmitter license in Wyoming, Wyoming residents couldn't buy and sell cryptocurrency. And so that was one of the first acts that was corrected, and that was in House Bill 19 last year. And so the Money Transmitter Act was fixed to be consistent with 47 other states in the United States. So now, today, Wyoming residents can legally buy and sell cryptocurrencies. Along with that, and sort of off the topic of cryptocurrency and back on the topic of blockchain in general, there's this thing that we've heard a lot about in the news the last year, and it's coins or tokens, or ICOs, an initial coin offering or an initial token offering. And what does that mean? And generally what that means is that there are companies out there that, using a blockchain platform, like a platform that might be used to administer Bitcoin or a cryptocurrency, companies have been coming up with product and service ideas to take out to investors and offer them to them. The idea behind a token or a coin is that it, again, is a digital representation of some value, much like a stock or much like a currency. Typically, though, the token has with it some consumable use at some time in the future. I'll give some examples in a few minutes. Anyways, companies essentially had sort of harvested this idea as a way to potentially evade securities laws. So I'm going to go raise $5 million for my startup company. Instead of doing a stock offering where I might have to be concerned about securities regulation and securities compliance, the idea was, let's sell this value as a token or as a coin, and billions and billions of dollars were raised this way over the last couple of years through these ICOs. Of course, we've now learned over the past year that the Securities Exchange Commission has taken a very different view of these coins and tokens than a lot of people did, and in fact, people are being indicted and brought in front of regulators, and there's been a large change of direction in terms of the tolerance in the market as to these tokens and coins. But nonetheless, it's still an avenue that companies have to raise money. There are legal ways to do it. And so what we saw in Wyoming under House Bill 70, which is perhaps one of the bills that garnered the most attention from the legislature last year, was House Bill 70 created what we would call an open blockchain token exemption. And so Wyoming was the first place in the world to enact legislation like this. And what it essentially allows a company to do is, in Wyoming, you can create a token, and there's definitions in the new statute as to what a token is. It has to have a consumable purpose, and it can't be sold as an investment or a speculation. But a company can take tokens and offer them to people, so long as that token is being administered on an open blockchain, meaning a blockchain platform that is open and accessible. And those tokens can be utilized in Wyoming legally. And so this again was the first place in the world that we saw a government body of any type take action to bring structure to this token offering, or this idea of a coin offering. And so that has created a lot of attention, and admittedly it's a very neat thing to have witnessed here in Wyoming, just the overnight explosion of attention from people all over the world who are suddenly now interested in Wyoming as a potential destination to launch a blockchain-based company that might have a token or a coin offering. Now again, we've learned over the past year that despite the fact that we have this state exemption, we still have to be concerned with federal law and the federal regulators and the federal issues that exist with companies that might undertake these offerings. But nonetheless, the momentum has been created. One of the other laws that was passed last year was property tax exemption for anyone that owns cryptocurrencies. So now back off the blockchain and onto the specific cryptocurrencies. We passed a bill in Wyoming last year that allows, if I hold Bitcoin here in Wyoming, that Bitcoin is exempt from property tax. So we're essentially treating it like cash, which again, for the vast majority of citizens probably isn't a big deal, but for those people out in the world and in the economy that are really in and out of financial markets surrounding these cryptocurrencies, that is a big deal, and it's a big signal, I guess, to the world that Wyoming is on the forefront of crypto and blockchain laws. There were a few other laws that were passed last year I won't go into right now, surrounding things like LLCs and use of blockchain records and things like that. But those three that I mentioned were really, I think, the three that garnered the most attention. Now moving forward and looking forward to this next legislative session and what's coming down the pike, the Blockchain Task Force this past year during the interim session took some time to look at a number of different initiatives regarding, again, how blockchain might or might not be implemented. Trying not to prognosticate too much about the future of cryptocurrency. It's very volatile, much like the stock market is, and there's a lot of competing cryptocurrencies, so it's hard to make too bold of predictions right now. But one of the things that Wyoming has, I think, noticed over this past year is, because of the attention that was gained from things like House Bill 70 and the property tax exemption bill, was it's created a lot of players looking at Wyoming as a potential destination. Some have moved here, but one of the things that's holding a lot of people back is for a number of reasons, and no blame to the banks, but banks have very tight restrictions when it comes to things like FDIC and maintaining their Fed accounts, and dealing with companies that deal with cryptocurrencies, or even more generally in blockchain, have raised some red flags for a number of banks. And it's been hard, and we've heard testimony from company after company regarding the fact that it's very hard for a lot of these companies to do business, not just in Wyoming but anywhere, because it's so hard for them to get bank accounts. A lot of banks have seized or shut down accounts of companies that are dealing with cryptocurrency or in blockchain-based applications. And so there are a lot of people out there that believe that because of this inability for a lot of these companies to just have bank access, not even credit access, just accounts for running payables and payroll and just operating a business, it's been difficult for a lot of these companies to maintain those types of relationships. And so a lot of people believe that that's one of the biggest bottlenecks we have right now in keeping this business from coming from Wyoming. So one of the bills I think that will get the most attention in this legislative session, if you haven't heard about it already, is it's 19 LSO 55. It's not in final bill draft form yet, but it was passed by the Blockchain Task Force. And what this bill proposes to do is to allow for the creation of a new breed of bank in Wyoming. It would be a depository institution only, and the depository institution would have very, very tight restrictions on it. So it wouldn't be making loans of any kind. It's not intended to compete with other banks, but it would be a member-owned bank that blockchain and cryptocurrency companies could, amass together to form a bank here in Wyoming to provide a banking solution to companies in this new industry space. And I do think it's exciting. I'm sure it's going to be a hotly debated bill. We've heard testimony from a lot of bankers that believe it might be unnecessary, and I don't know, maybe it is. We've also heard testimony again from a lot of companies about the fact that it's been hard for them to maintain banking relationships relationships. But this might also be another one of those signaling pieces of legislation to the world that Wyoming is, maintaining its edge on the forefront of blockchain and cryptocurrency. So this is a bill to watch. We'll see what happens with this this legislative session. But if Wyoming was to be on the forefront of the creation of a new breed of bank, specifically, looking at the things like the crypto and blockchain industry, it would no doubt get some national attention. There's a couple of other bills coming down the pike that aren't necessarily specifically or solely related to blockchain, but they are applicable to blockchain. One is, again, like we were just talking about with the way that a blockchain transaction works, something I didn't mention, but when people are accessing those transactions or initiating and completing those transactions, typically the coding creates what's called a key, and there can be private keys and public keys, and that's essentially, a private key would be your personal key to access transaction data or to initiate a transaction. A public key would be that code that's necessary for a third party to verify or to access the data or to prove that a transaction occurred. Well, data like that obviously becomes very, very important and very, very crucial for a lot of businesses to operate. In addition, when you add to it just the fact that on a day-to-day basis we're all using more and more digital identity features and we're housing more of our data digitally. We heard a lot of testimony at the Blockchain Task Force this past year that there is a growing demand for essentially data trusts. So we already have a trust industry out there that houses liquid assets and personal assets and can administer trusts for people. But the future, a lot of these companies are looking at ways that data is going to become the asset, and data will be something that needs to be managed and housed and protected in a trust-like manner. And so there is a bill forthcoming that would allow for the creation in Wyoming of personal privacy data trusts. I do think it's very unique legislation. We'll see where it goes, but a really interesting topic to watch. We have some other bills regarding LLC changes. We have the new creation of a Series LLC in Wyoming, which is a relatively new thing, and we have some tweaks and changes to that token legislation that I talked about that was so big last year. But I really think that the banking bill is the one that most people will be talking about this year, and one that will be really important to watch. So with that, I'll wrap it up. That's kind of where we've been the last year and where I think we're headed in this next legislative session. As I said before, blockchain is still new. There's people every day that are figuring out new ways to implement the technology. As a lawyer, it's fun. It's a fun challenge to be a part of, because we're every day assessing and looking at new ways that blockchain both solves and creates new legal problems, and it affects the way that companies and governments are going to be doing transactions and business. And so it'll be fun to see where it goes. I welcome any of you to reach out to me with any questions at any time. I spend a lot of time talking about this stuff, and I'm happy to dive deeper into any of the topics, or just personally on a one-on-one basis to answer any questions you might have. You can find me, my law firm's website, Hathaway & Coons, hkyolaw.com. My contact information is there. Feel free to reach out anytime. Thank you.